Good morning. We end January with a bang, mostly in these metals. Gold down $266 for the week. Silver down almost $23 for the week. Actually, Friday's trade was huge, down $35 or more in silver, down $600 in gold. Huge declines. A decline in wealth, some have calculated, is equal to one-third of the U.S. economy in a year. So it's pretty interesting. Corn down 2 cents, soybeans down 3.5, a little bit of weakness there. Strength in wheat, though, up 8.5 cents in Chicago, 3.25 in Minneapolis, a little cold weather. Live cattle, a lot of fluctuation too, but not much change for the week, up 95 cents in fats, up 10 cents in feeders. But crude oil up $3.95. US dollar down 0.545, but it gained a lot on Friday when that gold and silver declined. A lot of people attributing it to the appointment of the new Fed guy. They call it, the Marsh crash, because he is a lawyer like Powell, and a former Federal Reserve guy, Jewish lawyer, basically. In the respect of people's eyes, I guess they thought that he would be relatively independent and maybe the grain, the precious metals were just going up so fast before, and they just were in need of a, what would you call it, a correction, or is that a potential market top? Here's that gold chart. Huge decline on Friday, $600 on Thursday. We started the day with $200 gains, 200 plus dollar gains, were $200 lower and ended it just up with small gains, but those losses came in on Friday with new selling. Here's the silver market. If you're going to look for a top, you look for a bull market, acceleration of that bull market, some wild trade for a few days, and then a huge decline, and we certainly got it in silver Friday. Our high of the day was like 118, the low down here at 74 or 75 or so. Just think, you could have lost, what is that, $200,000 per contract in silver on a day trade Friday. So you don't see volatility like that very often in markets, but we have it. And that certainly looks like a top in the silver market. So the question is, do we rally back and hold these gains for, trade between 75 and 100 for the next 5 or 6 months, or do we bounce right down below here to $40 in a relatively quick period of time, because it has an impact on the other commodities? It's very important. If you look at these grains lately with the strength, we got our USDA report, actually some kind of similarities in corn. We lost a third of the year's range in corn on the USDA report day. We lost about a third of the value of silver yesterday as well. So interesting. But after we lost that, with the metals rallying, corn has reemerged back into its uptrend that we had in place before that one day USDA report that kind of hurt that uptrend. So will gold and silver hold a lot of those gains? So here's our recent strength in soybeans. Had a down day on Friday, but actually soybeans have recently gained with those gains in the metals. The question is, corn, soybeans, and wheat are at their like 7-year lows, basically within 10% of the 7-year lows. Gold and silver are 100% higher than their previous all-time high before yesterday's break. So much different situation. These are very, very cheap commodities relative to gold and silver, even after the break. So you got recent strength in wheat as well, and Minneapolis wheat, always a little more subdued market, I think, than the others. Feeder cattle, you kind of see what I'm talking about. We had a big break in feeder cattle, much like, an acceleration of the rally in feeder cattle into October. And then we had this huge break, probably indicating the top is in, but feeder cattle have rallied back here. Gold and silver do that. There's going to be upward pressure on these outside commodities, especially if the money from gold and silver flows into some of these other commodities that are very, very cheap, like crude oil and grains. Here's the live cattle market, also a potential top, broke hard quickly, like gold and silver have started to, on Friday. But they have gained back a good part of those shares. Fundamentally, cattle prices are still worth a fair amount. The new Federal Reserve chief doesn't take the helm until May, so it's kind of an odd thing. Here's that double bottom in the U.S. dollar. The U.S. dollar had weakness when gold and silver were rallying on Friday. Of course, gained about 700 or 800 points. We only had about a 500-point decline, which actually is a pretty decent decline in the dollar this week. But here's the thing, testing that 96 low, does the dollar continue to follow through on that, even with this new Fed appointment? Crude oil, you can see the strength we've had recently in crude. Obviously, crude has gone from $56 here in early January to 65, 66. It's rallied $10, which is, almost 20% when you started at 56. So the crude oil still has some strength, although it also dropped on Friday with the weakness in the gold and silver market. So we have an interesting situation here. A huge rally in gold and silver the past year and a half. Looks like a potential top. Looks, feels, and smells like a potential top. Is it? And then how does gold and silver react afterwards? Will it react like cattle where it regains most of those losses and holds its relative value? Or will it roll right back down to 2,000 in gold and 40 or $30 worth in silver? Kind of doubt that. Federal Reserve appointment, is that really the trigger? I mean, gold and silver were pretty wild before that. Maybe they were already in the process of forming a top. But the interesting thing is, does money flow into these other cheap commodities like grains and like crude oil actually, and do they find some support and strength? Actually, at this point, it still looks like they have. Hope you have it's a little bit to ponder this weekend with this interesting trade in gold and silver on Friday. You have a great weekend and good marketing.